Okay, we are looking at this question paper, company financial statements and notes, but we are only going to look at the adjustment for the rent income. Okay, the company is Juliana Limited. Let's look at the rent income from the balances and the totals that are given. The rent income is given somewhere here, and then the amount is 255,500. So this is the rent income that was received, 255,500. And then let's go to the adjustment for rent. Okay, it's adjustment number B2. A storeroom was rented out on 1 March 2022. Rent increased by 15% on the 1st of January 2023. The rent was received for 14 months. Okay, so rent was increased by 15% on the 1st of January and the rent was received for 14 months. To mean we've got 2 months received in advance. So the reason for our calculation is for us to find the money that was received in advance so that we can deduct it from the rent income that was received, the 255,500. Okay, the easiest way to do this question is to start by making a timeline. You make your timeline. Okay, our financial year ends on 28 February 23. So it means it began on the 1st of March 22. Okay, and then the increase they said is somewhere in January. So 1 January, there is an increase of plus 15%. Okay, so this is our timeline from 1 March to 28 February. But they have said that the rent has been received for 14 months. So it means it's the money was not received up to 28 February. It was not received up to 28 February. So we are going to add March. We are going to also add April. So it's going up to April 30. Okay. So this is our timeline. Okay. So this is what we do. The rent before the increase, we are going to say that the rent before the increase was how much? 100%. 100%. And then the rent after the increase plus 15%, it means it's going to be 115%. 115%. Okay? So now what we're going to do is to say, okay, fine, 100%, it was 100% for how many months? From the 1st of March up to 31 December. So there are how many months there? There are 10 months. So we're going to say multiplied by 100 times 10 months. And then you are going to say 115 multiplied by 4 months. Okay? So let's do that calculation. 100 times 10 is equal to 1,000. And then we are now going to say 115 multiplied by 4 months is going to give us 460. So we add the two amounts. They will give us 1,460. Okay? Remember, the money that we want is the money with the increase, the money that is coming on this side with the 15%. So we are going to use the 115 times 4. We express it as a percentage of 1,460. So we're going to say 460 over, okay, we've already done that, 460 over 1,460 multiplied by the rent income that was received. The rent income that was received, remember, it is 255,500 times 255,500. 255,500, okay, which is going to give us an amount of 80,500. 80,500, remember, it is for the 4 months. So we are going to divide by 4 months, in order for us to get the money per month. When we divide by 4 months, we are going to get something like 20,125 per month. Okay? And how many months do we have in advance? If we look at our timeline, we've got March and April, we've got 2 months. Remember, they said the rent was paid for 14 months. So we multiply by 2. We multiply by 2 months, which is going to give us 40,250. So 40,250 is the deferred income or the income received in advance. Income in advance. Income in advance. Okay, these are income in advance. Okay, so what do we do with income received in advance? We subtract it. Remember, it is not needed in the current financial year. It is for the following financial year. So we are going to subtract it. So now we say 255,500 minus 40,250. Okay, it's going to give us something like 215,250. So this is the amount for rent income that we are supposed to record under other operating income in the income statement. Okay, these are all the calculations. We start by the timeline, which goes up to April, and then after that we say 100 times 10, 115 times 4, we get 1,460, and then we say 460 over 1,460 times 255,500, which is the rent income that was received. We get 80,500, which is the rent for 4 months with the increase of 15%. We divide by 4 months, and then we get 20,125 per month. We multiply by 2 months because there are 2 months in advance. We say we get 40,250, which is income received in advance. What do we do with income received in advance? We subtract it. 255,500 minus 40,250, we remain with 215,250. Thank you.